Hello, ladies and gentlemen. We're coming at you today again. We're going to be talking about all kinds of real estate out there today. We want to know what on earth is going on in the markets. How is this going to help you, and what you could do about to help you protect all those prices so that you're going to make more money in the future. Let's jump straight on into what is happening in the markets right now. And we have to ask ourselves, as these months are continuing on, what on earth is happening right now? Because prices are going up everywhere, and we want to know from you guys what you're seeing. The prices are far exceeding what I ever thought would be possible. Now, what are you guys seeing in your local areas? Are you seeing prices go absolutely crazy? Because I'm seeing them go absolutely crazy. That's what I'm seeing. But if you could see here, the prices going from 980,000 going up to 1.1 million, I just can't even believe this. This is just shocking to me. So if you see those prices going up, now we're talking $120,000 that the prices have gone up. If you remember, I made a video a while back and I was seeing that prices were up 50,000. 50,000. And now it's 125,000. I cannot believe it. And so the prices that people are willing to pay now just doesn't make any sense. I can't even believe that it's happening this way. So look at the average price. We are now almost the same price as we were a year ago. And at the exact same time, interest rates have went from 0% all the way up to like 6.5% right now for a fixed rate mortgage. Unbelievable. So people want to line up and smoke themselves. Like, I'm like, you have at it, my friends. So if we look at the peak, what it was last February, yeah, it was $1.28 million average price. Now it's 1.1. So I think that the prices are, it is just crazy town to me that this is actually happening. So this is across Canada, and we can see that the interest rates have gone way up. Now the policy rate for the United States is, for the Canada, 4.5% is where we're sitting, and the US went to 5.25%, which is even higher. That is crazy to me. But why this is happening, you guys, is if we go and take a look at how mortgages are calculated, they're calculated off of bond yields. If we take a look at the bond yields and see they dropped off the cliff. And when did they start? Look at that. Right around Christmas time, it dropped really low, and then it's bounced around a couple times. And so this is the Canadian one. Obviously, you'd like to buy when it's very low down here. Now, the U.S. is very similar. Let's take a look at where their interest rates were just before Christmas, all the way up at 7.08%. If you look at where they are today, they're almost down 1 full percentage point, which means it's going to push the price of homes up by 10%. That is a massive, massive change. But where are we going to go from here? We have to look at what is actually happening for our debt clock. So just go to U.S. debt clock and take a look at it, because the United States now is $31 trillion in debt. But what's interesting is look at what the debt per citizen and the debt per taxpayer. If you have a job, you're a taxpayer, you owe $250,000 toward national debt. But that's not even talking about U.S. state debt. The biggest problem that you got to look at is what unfunded liabilities are, because unfunded liabilities is the $187 trillion problem that is coming for the United States. And so though it says per citizen at 559, we know that when it comes down per taxpayer, this is several million. Now, the case is the exact same for Canada. Though it is a big, big problem in Canada, and the numbers look hard, look at where the Fraser Institute estimates that we are $4.1 trillion in direct debt and unfunded liabilities. So you have to ask yourself, what on earth is an unfunded liability? Number one, an unfunded liability, you guys, is if you have a pension, or if you have Medicare that you're expecting, or old age security, or any of those entitlements that you think that you're going to get later on in your life because you paid for it. But can you imagine having $4 trillion in direct debt and unfunded liabilities? So this means $243,000 per person in our debt right now. That is bananas. This is crazy. And so we got to make sure that we're paying attention to this stuff moving forward. If we look at Canada, though, Canada is broken up into a lot of different areas. And I want to know where you guys are looking. So if we look at provinces wide, Alberta, British Columbia, maybe we want to look around in some areas in Toronto, like maybe London. We can keep Lower Mainland. Let's look at Nova Scotia, actually. We'll bring in the capital cities, maybe Vancouver Island. We can look at a lot of different places. If we take a look at a lot of different places, you can see that they don't all perform the same, but they're very, very similar. We can see the ones at the very top, up top here, those are the ones that have the biggest rise in prices and the biggest fall in prices. And so you're kind of looking for ones that are very low. Let's take a look. That's Nova Scotia. Nova Scotia still had a massive pump and dump, but they all follow that because we live with interest rates. This is what we live with. So this is very, very different for all of us in these different areas. Let's take a look at what they are. London, St. Thomas, it's pretty rough. If we look at British Columbia, that's a little bit less. Ottawa, looking pretty soft. Nova Scotia, well, that's the least of it. So you would say here, well, London is the worst performing for sure. It has the biggest drop. But we also haven't paid attention to the larger areas like Toronto and Vancouver in Canada. And once you add those puppies in, let's take a look what happens. If we add Toronto and Vancouver into that, let's see if they come up. Here's Toronto, pretty rough. Vancouver Island, where is Greater Vancouver? There's Vancouver. So do you see like London, St. Thomas, that's pretty bad. I think Oakville was a little bit worse. So it really, really depends where you're looking is my point. If we look at Oakville, Oakville is one of the worst. Look at that. My goodness. So London was the biggest dropper overall. Unbelievable. So it's important to know this stuff, right? So where you want to be investing, you guys, is the colors that are on the bottom and not so much this. This is manic depressive territory. But if the price gets back anywhere close to where when they started printing money, I mean, that would be a buy all day long, right? But where did we start printing money? March, April of 2020. You take a look where those prices were back then. The price back then was sitting at, let's instead of that, let's go to benchmark prices, okay? Let's pick Oakville and let's go to 2020. Okay, $1 million in Oakville in April 2020. And where is it now? 1.3. So if this comes down, you know, a little bit, you're already going to be in good territory. Since they printed 50% more money, you would expect prices to go up 50%. But then they raised those interest rates by 5%. So then we have to factor that in too. So you have to factor in for the growth of money. So we're getting pretty close, actually, the drop to being consistent with the prices and none of this manic depressive stuff that we're seeing right here. All right, you guys. And so let's take a look at Toronto before we head off. This is where we are. And I'm always suggesting you guys take a look at where the prices are absolutely spiking to the moon. As they spike to the moon like this, we all have to know what is happening out there. And this is because everyone is coming out to try to buy right now because they think that the time is going to be better in the future, and it might not necessarily be that way. Right now, it went all the way to 30 days on average it took to sell a home. But look at where we are now, 18.5 days. It's dropping and dropping because people are lining up and doing the same old funny business where they are offering on properties like a lot. How much are they offering? Well, if we take a look at where we were last year, people were still expecting to get a property under market value. They would look expecting a discount. But where we are today, we're seeing a massive spike in prices. These prices now, they're now selling for 103% on average. So they're going over what it is. So this is what's telling you that a lot of people are now lowballing. They're putting the value of the property much lower than what it's actually worth. So please know what we're dealing with. Please be prepared to contend with this moving on. This isn't going to go anywhere. This is going to be sticking around for a long, long time. So you guys, I wish you the very, very best. I hope that you have a fantastic evening and a good weekend. Keep on crushing it. If there's anything that you need to from me, please reach out anytime. We're always here. Thank you so much. You guys have a great night.